Paul Jacobson, CFO of General Motors, joins us now. Paul, good to have you back on the show, and thanks for taking the time after reporting earnings here on the day. Let's just dive right into it, and with some of the numbers that we just reviewed for our viewers here. With regard to the guidance, raising the full year 2021 guidance, what data has the company been reviewing that led to the confidence in raising the figures that we should expect and look for throughout the rest of this year?
Well, good morning, Brad, and thanks for having us back on. It's good to be back. First I want to start by thanking the entire GM team. When you look at what the challenges of the quarter we overcame, strong demand environment, and just incredibly high quality in all of our vehicles, whether it's our employees, our dealers, our suppliers. Everybody really came together to make this quarter and the first half of the year really something special. And as we look at the demand environment and we look at what we're able to produce and how we're managing through the challenges of the semiconductors, gave us the confidence to be able to raise our guidance for the full year. And we're excited about the way the year's progressed so far.
And on managing some of those challenges, General Motors pausing production on a handful of its truck assembly plants, citing that global semiconductor chip shortage that we've been discussing here. How are you navigating that problem continuously on a daily basis here?
Well, Brad, it's been quite a challenge, but the team has really been doing it day by day, one day at a time. And we as a leadership team meet every week to talk about this in order to, not only manage the supply of chips that are coming in, but also allocating those to our priorities. And as we've seen some of the pressure in the supply chain mount, most recently from some of the COVID challenges in Malaysia, where there's some finishing and packaging operations that are done, we saw that we were going to have to take a brief shutdown in some of the truck plants, which is what we announced yesterday. But overall, we still see an upbeat look. We're being cautious about COVID. We're being cautious about semiconductors, but raising our guide is a great outcome for us in the first half of the year.
We know that the company is investing heavily to lead the future of mobility. I've been reading through your own presentation decks as well prior to the earnings call, as after we've continued to watch these numbers be digested by the street. I kind of think forward now to, with regard to the semiconductor shortage related production pauses, to what extent has that impacted the timelines for the company's EV ramp and correlating revenue generation?
Well, it's a great question, Brad. And one of the things that we certainly built the foundation of the year on, which was we were going to deal with the short-term challenges, but it wasn't going to deter us from our aspirational goals and what we set out to achieve. In fact, what we were able to do during the quarter is take up our spending forecast on EVs and AVs through 2025 from $27 billion up to $35 billion by accelerating more battery capacity, adding 2 new vehicles, and making more investments into our Hydrotech technology, which is our fuel cell platform for long haul and heavy hauling. So not only have we been able to maintain it, but we've actually leaned in and accelerated our vision in the face of some of the success that we've had in the first half of the year.
You mentioned AV, autonomous vehicles. What is the base case timeline for cruise automation to begin commercial development as well?
Well, I'm really excited about what the Cruise team is doing, and they're making great progress in driverless testing throughout San Francisco and rolling out new deals as we've seen with what they were able to do in Dubai. So they're making tremendous progress, and we're going to have more to say about their journey as we go to our Investor Day, which is scheduled for October 6th and October 7th, and really excited about what the future is for them.
Certainly. With regard to that journey, I naturally have to ask, with the $10 billion in liquidity that it has for itself, as reported during this most recent release, and received backing from SoftBank in the past as well, has there been any advancement of discussion internally about a spinoff of Cruise Automation or an update to the estimated valuation of the business?
Well, we are 100% focused on the technology and moving forward towards commercialization, and also working collaboratively between GM and Cruise on our own aspirational AV technology. So there's a lot of work to do, and that's what we're focused on right now.
Certainly. When we think about the infrastructural changes, and you and I have discussed this in the past, especially as we've got a little bit more of how we can read into what the administration, what Congress, and all of its chambers are pushing forward on the infrastructure deals in Washington. What are your expectations there, and how that will impact where GM is able to have more of an electrified infrastructure that also benefits the number of different vehicles that will be on the roads in the future?
Well, we've obviously built great relationships with the administration, and Mary's deep connections are really an asset for us across the entire team. And what we're looking for is how can we advance through infrastructure, whether it's charging stations and getting ubiquity, making it easier for customers to adapt. But really, we have a big hand in that too, with the quality and the capabilities of the vehicles that we're producing. And that's one of the reasons why we're accelerating this. We want to be ready for an inflection point in EV adoption and making sure that we've got the assets and the production capabilities in place. But we're really excited about that future.
Certainly. And then just lastly, while we have you here as well, considering the e-commerce sales acceleration during the last 12 to 15 months, one of the parts of the business that I geek out a little bit over is BrightDrop, that seems to be entering the first and last mile delivery market at a perfect time after being announced earlier this year. FedEx is the first customer there. As logistics businesses scale up their EV fleets, what type of sales ramp is GM anticipating and forecasting for as more vehicles become available for order in 2022?
Brad, I think you touched on a really underappreciated part of the story that we're continuing to lean in, and that is the versatility of our Ultium platform. When you look at what we've done with battery technology, the applications go far beyond the passenger vehicles, and that's what you see in BrightDrop. So what you really get here is an opportunity for us to help the first last mile companies out there achieve their electrification goals and their emissions future as well. So that platform gives us the ability to serve it across all different modes of transportation. And you've seen that in rail, and you've seen that in various partnerships as well. So we're excited about what that can do, and really excited about what the future of BrightDrop holds.
Paul Jacobson, who's the CFO over at General Motors. Paul, thanks again for joining us this morning. Always appreciate the time discussing some of the most recent results for the company. All right, Paul, appreciate the time this morning.